Hello traders, did you know that gold on a 30 minutes time frame is currently trading in a range? Join me as we take a look at the charts. Hello traders, my name is Jacques and we're currently taking a look at gold versus the US dollar on a 30 minutes time frame. Now the first thing I want you to note is how we had a low volatility, very constant downtrend up until we formed some divergence over here where price made lower lows and the oscillator made higher lows. You can see it both on the RSI and stochastic, and from there we had a push to the upside, and then we started with this current range you can see over here. Now there's quite a few fascinating points I want to highlight on this range. So firstly, we have a channel, a price channel over here that you can see these three lines. We have the center line, the upper and the lower trend line. Now when we trade price channels, it works quite effectively usually in a ranging market, and currently we do see some ranging behavior. Now in a ranging market, that is where our oscillators usually come in very handy. So typically what we're looking for is some form of extreme, and I'm going to zoom in a little bit here to show this a bit clearer. So firstly, we're looking for some form of extreme, and what I mean by extreme is a deviation away from the mean. And when we say mean, we mean the middle line of our channel. So that's the first thing we're looking for, is price to be some distance from the middle line, as you can see over here. Secondly, we want some confirmation, and we get this in a few different ways. It can be support and resistance, candlestick patterns, or in this case we can use our oscillators. The favorite oscillator for many people in these circumstances will be stochastic, and the settings here is 533. So you can see here stochastic is overbought and it crossed the signal line. So we have a cross and overbought as a bonus, and then we typically have some reversion behavior where price move back to the mean, as can be seen over here. Then we have a few other examples. Over here you can also see some candlestick patterns over there, two hammers that formed, also some crosses of the stochastic. Again over here, across in overbought, you can also see those candlestick patterns over there, and over there some nice shooting stars that formed and nice reversion behavior back to the mean. Some people also target the opposite side of the channel, as you can see over here, where prices reached all the way back close to the bottom, basically touching the bottom. All right, we'll go through a few more examples. You can see over here the cross, the extremes, again candlestick pattern, extremes, and the cross of stochastic. And even though stochastic were not overbought in this specific example, we do have the cross, and it's fairly close to the 80 level. All right, we have another example here, again the nice candlestick pattern. We have again here, this is not really a good example of extreme price, because price basically just went above the middle line, but since it is a downward sloping channel, we do have a little bit more bias for movements to the downside. Now let's get to the exciting part, looking at today's price action. Now before we look at the setup, I just want to highlight some very important support and resistance levels. We have the 2355, 2333, and the 2295 levels. Then, with today's setup, as you can see over here, we have, again, a few things that count in our favor. Firstly, we had a very strong move up, right? And so price is a little bit overextended. That is confirmed by the RSI being very close to the 70 level and our stochastic being above 80. Price are fairly far away from the center line, which means it's a little bit more of an extreme price. We've got this very nice candlestick pattern over there, a nice shooting star that formed, and price is still even above our upper trend line. We've got the stochastic that crossed, we've got the candlestick. So all of this, as you can see per history of this trading range, stands in our favor for a potential move to the downside. Now, the first target can be the center line, or it can be the 100 period simple moving average in blue over here, whichever one comes first, and also depending on your personal risk appetite. If you want to be a little bit more adventurous, you might even hold that position to potentially reach the bottom of this price channel, right? And since we have a little bit more of a downward bias, since price is also below the 200 period simple moving average, that is something that many traders might consider as well. However, sometimes price do break out of the ranges inevitably, and if that will be the case in the next trading day, if price breaks above the 2333 level with conviction, we will then be looking for buy targets, and the next possible target will be the 200 period simple moving average, as you can see over here in yellow. So wherever that moving average is by the time of the breakout, that might be the first target. Alternatively, the next big support and resistance level is this 23555, which can also be a potential target if the market breaks out of this range with conviction, and as an added condition, probably the 2333 support and resistance level. So, ladies and gentlemen, I hope you've enjoyed the session. As always, safe trading, and I hope to see you soon.